All investors are looking for an investment strategy that works well consistently while meeting their individual goals and risk tolerance. But with inevitable unknowns, a set of rules and procedures cannot always predict the asset classes that will outperform. Joining us now is Michael Strobaek, Credit Suisse's Global Chief Investment Officer, and Nannette Hechler, Head of Investment Strategy. Michael, with the summer break now over, many investors are taking a fresh look at their portfolios and wondering what the final months of the year might bring. What would you tell them?
Well, we would tell them that they should stay invested in equities. We've seen during the summer here somewhat uncertainty around geopolitical risks in the Middle East and in Russia, and that brought bond yields down together with weak economic data in the European Union. But we still believe that equities are the right place to be invested, to be overweight. Equities are reasonably valued. They have an interesting earnings yield, and the global liquidity provided by central banks is still supportive. And we would recommend investors still to have a focus and an overweight in the European zone and Japanese equities. These are sort of cyclical overweights of a bet on a global recovery, which we still think is quite well on track.
So does the low volatility environment help equity returns or jeopardize them?
Well, generally it helps. It provides, if you will, a level of stability. We've seen similar periods in the past, in the mid-90s and the mid-2000s, where equity volatility was for a long time very low, and during these periods of time, markets actually went slowly but steadily up. And we're still encouraging and saying to people, look, you should stay with equities for now.
Nannette, speaking about volatility and other factors that influence the returns of asset classes, which are the most important factors in the Credit Suisse investment strategy?
In our investment process, we essentially look at 5 factors. The first one is valuation. We generally prefer assets that are cheaply valued. We have to assess which one is expensive, corresponding or relating to others. The second important assessment is whether cyclical fundamental drivers are pushing us towards that fair value or keeping us away from it. But not only that, investor behavior, as technical analysis can often capture, is really quite useful to understand whether a trend is building, whether momentum is actually increasing or declining. And next to that, risk and flows provide us with a view on how investors are positioned. Finally, a quantitative check of our assumptions is always a useful complement as well. These are the 5 factors.
Obviously, you know very well which factors have the most influence in the bank's investment process. How do you factor in the so-called known unknowns, such as geopolitical risk?
In our view, the best way to deal with uncertainty is, first of all, play out several scenarios and look at what the different investment implications of these scenarios can be. That's very helpful because it helps identify which strategy could actually play out both in base cases as well as risk scenarios. I'll give you an example. Our expectation of a strong US dollar plays such a role, it could be qualified as a strategy airbag. But of course, models, scenarios, being systematic is only one part of things. It's very important for us to have people on the ground, very close proximity to markets, around the clock, across all regions. Our regional CIOs are helping us doing that.
Back to you, Michael, then finally. You chair the Credit Suisse Investment Committee, which is the governing body for the bank's entire investment process. What are the key benefits of this systematic process?
Well, one of the key benefits is that we, through the process that Nannette has just described and in the Global Investment Committee, we really pull everything together that we see within and across asset classes. And what the client gets is a consistent and holistic investment strategy put together by all the experts that we have in the firm. We're very disciplined in the way that we talk about the factors that Nannette has just outlined, and we actually try not to be led by emotions, greed and fear, but by a rational process, and in the end we come to a decision that is solid and well-founded.
Thanks, Michael.
Thank you.
Thanks, Nannette.
Thanks.
For more information on market movements and global trends, check out News and Expertise on the Credit Suisse website.